Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the Elite Renko Trading Strategy and how effective we can use this Renko chart in our Forex trading. You would learn what the Renko chart is about, their unique characteristics and a step-by-step approach to incorporate them into your trading strategy. So stay tuned until the end of this video to gain valuable insights that could enhance your trading decision. So first of all, we start by understanding what Renko charts are. And Renko charts are this a unique type of charts, price charts that focuses solely on price movement. They focus solely on price movement, completely ignoring time and volume. Unlike your traditional candlesticks, the Renko charts are brick that represent a fixed price movement which you determine beforehand. For example, if you set your brick size to 10 pips, setting your brick size to 10 pips, a new brick will form. This means a new brick will form when price move 10 pips above or below the previous brick. So changing your brick size to 10, this basically means that for each time price moves a distance of 10 pips, your brick size will form a new brick. This is basically what the Renko chart is about. Each bricks represent a significant price movement, green or red, that signifies either an upward movement or a downward movement. In case of the green, it signifies an upward movement. Then in terms of a red, it signifies a downward movement. So let's see how we can trade using the Renko chart successfully. If you can remember, the Elite Renko strategy combines three core components, and what these components are the brick size selection, the trend confirmation and volume analysis. So these are basically what we need for the strategy. So let's break this down systematically. We start by selecting 100 pips brick size for this pair. So we are going to select 100 brick size for this particular pair we are trading with. This size filter out minor fluctuations while capturing meaningful trends. So this is basically why we chose the 100 pips brick size. In addition, we add a simple moving average of 10 period. So we add a simple moving average of 10 period to further understand our strategy. Out of 10 period. Remember, a new brick will form after 10 pips has been reached. So when bricks consistently stay close or above the SMA, this simple moving average, it signifies we are in an uptrend. And when the brick consistently stay below the SMA, it signifies we are in a downtrend. So we have to keep this in mind. After we add our indicator, this indicator would help us to better confirm the direction or the trend of this chart. Then we'll have to confirm our entries using our unbalanced volume indicator. So adding our unbalanced volume indicator, this will help us get a better understanding. Adding our unbalanced volume indicator. Alright. For long positions, you wait for the unbalanced volume indicator to reach a new high. When the unbalanced volume indicator reaches a new high, this is a signal for us to enter a new long position. This new high, at least two consecutive green candles above the SMA. So when it reaches a new high, we check whether we have formed at least two green candles moving in our directions to the upside. This alignment confirms buyer's strength. So for short position, you look for a new unbalanced volume low pair with red bricks below the simple moving average. This will show that we are in a downtrend. Now, how do we place our stop loss? Now, let's take a new trade and see how we can apply this to the real life market. Now, as we can see in this area, when price is above our simple moving average, we checked our indicator, our unbalanced volume indicator, and we can see it is creating a new high in this area, signaling that we are truly in an uptrend, coupled with the fact that price is trading above our moving average, our simple moving average. So we would enter a long position after we have seen a formation of two bricks. This is where we enter our long formation, our long trade, and we put our stop loss away from our entry, two bricks below our entry. So we put it exactly below those two bricks. This is where we set our stop loss. We set our stop loss just below the two consecutive precising brick. Then in a short position, when you have found out that price is significantly below the simple moving average, you enter your position when you find out price has made a new low, on our unbalanced volume indicator. And as you can see, we made a new low. This is where we would want to enter our sell position after the two red bricks has been formed. Remember, you put your stop loss just above that position. You put it just above the second candle, the second red candle, and this is how we place our trade. This approach accommodates normal market fluctuation while protecting against false signals. Now, to exit your trade, you exit when price closes below the SMA. Once you notice price is getting close to the SMA, in fact, when price gets to the simple moving average, this is where you would want to close your position in terms of a bullish trade. And in terms of a bearish trade, once price gets to your simple moving average, you will close your position. This is how we manage our trade. For managing our risk to reward, you would always secure partial profit after three blocks has formed. You can use, when three blocks has formed in your direction, you can secure some profit, and as price keep moving in your direction, you keep using a trailing stop loss that would remain on that position. This balances the capturing trend with locking in some profits as you go in that direction. So by combining these elements, you can create a systematic approach that prioritizes clarity and discipline. The strategy's strength lies in its ability to filter out noise while aligning with price action, the trend direction, and the volume dynamics in an actionable signal. So you have to know how to combine both the unbalanced volume indicator with your moving average combined with your Renko chart. This is basically how you can combine these three tools to form an Elite Renko trading strategy. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe, and turn on the notification bell so that you never miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.